Hey there, welcome back to Investaholic TV. Today, we're going to be talking about one of the most important metrics in stock valuation, the PE ratio. The PE ratio, or the price-to-earnings ratio, is a valuation metric used to measure a company's current market price relative to its earnings. It is calculated by dividing the current market price per share by the earnings per share, EPS. So, why is the PE ratio important? Well, it can give investors an idea of how much they are paying for each dollar of earnings generated by the company. A high PE ratio can indicate that the market has high expectations for the company's future growth prospects, while a low PE ratio can indicate that the market is less optimistic about its growth potential. However, it's important to note that the PE ratio should not be used as the sole basis for investment decisions. It's just one of the many metrics that investors should consider when evaluating a stock. There are also some potential drawbacks to using the PE ratio. For example, it doesn't take into account a company's debt levels or its growth prospects. Additionally, PE ratios can vary widely across industries, making it difficult to compare companies across different sectors. Speaking of industries, let's take a look at some indicative PE ratios across different sectors. The tech sector, which is known for its high growth potential, typically has a higher PE ratio than other sectors. The current PE ratio for the tech sector is around 30. The healthcare sector, which is generally considered to be more stable, has a lower PE ratio of around 20. The consumer staples sector, which includes companies that sell essential goods like food and household products, has an even lower PE ratio of around 15. In conclusion, the PE ratio is an important metric to consider when evaluating stocks, but it should not be the only factor you consider. When evaluating a company, it's important to look at a variety of metrics, including its debt levels, growth prospects, and industry trends. That's all for today's video. Thanks for watching, and don't forget to hit that like and subscribe button for more financial content.